Hello, I'm Sam Cox, Commercial Director at Qdos. Today I'll be running through our thoughts in response to the draft legislation published by HMRC on Monday, targeting non-compliance in the umbrella company market. It's a short update and thankfully it's in line with market expectations, but it naturally has some serious implications for agencies, MSPs, end hirers and the umbrella companies themselves. So let's break down what it means. From the 6th of April 2026, if a worker is employed by an umbrella company and PAYE is not correctly deducted, HMRC will have the ability to recover that unpaid tax from other parties in the labour supply chain. This introduces the concept of joint and several liability, meaning that a number of different parties in the contract chain may be directly liable for that unpaid tax. In practice, the relevant party will be the agency who has the direct contract with the end client. If there's no agency involved, the end client themselves will be viewed as the relevant party for tax liability purposes. None of this was unexpected. It gives HMRC flexibility though and puts the entire supply chain on notice. In addition to clarification on the joint and several liability, another point of interest from the draft legislation includes tackling arrangements of purported umbrella companies. This is seemingly targeting arrangements whereby workers would be given a material interest in an umbrella business, perhaps as a way of circumventing the definition of an umbrella company within the legislation. Interestingly, some observers have suggested that this approach to tackling non-compliant structures may also have implications for payroll providers in the self-employed CIS space who are otherwise operating entirely compliantly. In these cases, tax liability would primarily be from exposure under Section 44. However, the wording of the draft legislation could be interpreted as putting such businesses at risk of being considered a purported umbrella company. More discussion on this point is expected over the coming weeks, so watch this space. Ultimately, the draft legislation contained no unexpected curveballs and is being viewed positively by the umbrella sector as a whole, who've been working diligently since the initial consultation to prepare for reform. Ultimately, agencies, MSPs, hirers and umbrella companies now have until April 2026 to consider their approaches and implement any relevant changes. It's the first step in a broader reform programme targeting the umbrella market. It's expected to be followed by direct regulation of umbrellas themselves, covering licensing, transparency and worker protections. So whilst this measure focuses specifically on PAYE enforcement, it signals that compliance across the supply chain is now under scrutiny. So if you're an agency, an MSP or a client, this is the time to act. Review your umbrella partners, understand your contractual setup and review your overall approach to engaging contingent labour. Compliant operation remains entirely viable. It is crucial though for businesses to position themselves correctly in any new legislative environment. Here at Qdos, we do have a track record of serving the recruitment market with tax liability covers, and following publication of the draft legislation, we will be working in the coming weeks to develop new insurance products specifically to address the new liabilities that will come into play as of April 26. Watch this space for further details on that front, but in the meantime, if you'd like any help reviewing your supply chains or understanding your exposure under this new legislation, we're here. Subscribe for updates, visit goqdos.com for further support. Thank you.